So guys, first and foremost, welcome to this YouTube video. All right, this is the 5th week and the 5th episode of me documenting my weekly trading results here on YouTube. Right, so if you are new to this YouTube channel, in a brief context, what I normally do is that every end of the week I come and show you, or I make a video documentation of how my week has gone as far as trading is concerned. Right, in other words, I show you the trades I've taken and their outcomes. Right, then eventually in the end, I sum the trades up and I show you if the week was a losing one or it was a winning one, depending on the trades I've taken, right? So this is what this YouTube video is all going to be about. And if you really want to align yourself with such content, do well to subscribe, like this video, and let's enjoy this episode, right? I know you are going to enjoy it because this week was a massive one, right? And there's a lot of insight that you will learn from this episode. So let's watch this video. Make sure you watch up to the end so that you learn a lot from this video, right? So guys, let's get to the first day of the week where I took the first trade. Let's get right into it. So on Monday, I did take a trade. On Monday, and it was a buy. The reason behind the buy was that, as you can see overall, the whole market is massively and aggressively bullish from the daily time frame, right? And I was looking forward to the market sweeping off these highs over here. This was a buy side liquidity. So I was looking forward to the market sweeping those highs, and this was Monday. And that was all I wanted to see for me to align myself with the buy setup, right? So now I headed down to the 1 hour time frame to see if there's something that could support my daily bias, which could be something like a fair value gap or an order block, right? So when we head down to the 1 hour time frame, so from the 1 hour time frame, I did see that there was an order block already here that is supposed to be mitigated, and the order block took out these highs, internal highs. This is what makes it a valid order block, right? When it takes out a high. So when the order block leads to a high being swept, that is what we refer to as a valid bullish order block, right? So this is what I wanted to see. What I wanted to see during New York session is that the market reverse, or the market drops down to that order block, and at the same time sweeping liquidity as it does drop down to the order block, right? So when we head down to the 15 minutes time frame to see what actually happened during New York session. So as you can see, this is the order block we marked from the 1 hour time frame, right? And here is New York session. New York session clicked in, and what did happen as New York session clicked in? Sweeps this London lows, right? This is all I wanted to see during New York session, right? Now, what else is left? The last confluence that I look for is a market structure shift, and I never wanted to enter from the 5 minutes time frame within here. There was an order block. There was a market structure shift from the 5 minutes time frame, but it was inside this zone which I marked right now. But the issue with that zone is that there was an order block. There was a bearish order block lying over here, right? So I thought maybe the market would tap the order block and drop down, right? That's why I never wanted to enter for the trade. I wanted to confirm if this order block was going to be violated. In other words, market sweeping this as a high, right? If the market took out that high, which also has the order block, now my trade is going to be valid. That's what I was thinking about. Now I waited for the market to take out that high, and I entered for the trade immediately after there. My stops were just below here, and my TP as always at a risk to ratio 1 to 4, right? But as you can see over here, the market gave us a 1 to 2 risk to ratio. I took off, I think it was less than 1%. I took off less than 1%, even less than 50% of the position. That was my issue, right? I never took 50% of the position, right? And as you can see over here, I never moved my stop loss. My stop loss, I moved it over here, right? I never moved it to the entry level, which is the break even, right? Because I wanted to align myself with market structure. I never wanted to put my stop loss in a place that is emotionally driven, right? I wanted to follow market structure. That's why I put it below this newly formed low, right? That's how the trade went, guys. The market swept, gave us a risk to reward ratio of 1 to 2, and reversed and took us off at our stop loss. So overall, what did happen is that it was a break-even trade, right? I never even met a single percent. It was a break-even trade, and that's what happened on Monday. Now let's see what happened on Tuesday. So on Tuesday, I was still looking for buys. Honestly, I was still looking for buys, though these highs were swept on Monday. I was still looking forward to the market sweeping the Monday highs as well. This one's over here, right? And the next reason as to why I was looking for buys is that, as you can see, overall direction of the market is bullish. So this also what added to my confluence that I was supposed to be looking for buys on Tuesday, right? So we went down to the 1 hour time frame to see if something could support my bullish bias from the 1 hour time frame, right? So from the 1 hour time frame, as you can see, my eyes were still on this order block, right? They were still on that order block, or we call it the demand zone, right? My eyes were still there, so I was looking forward to the market not breaching that order block, right? I was still looking forward to the market respecting that order block and moving up, right? So since my daily bias was locked, I just wanted to see something like a liquidity sweep during New York session and a market structure shift, and I enter for my buy entries, right? Like always, nothing new, no surprises, right? So we'll head down to the 15 minutes time frame to see what happened during New York session. So during New York session, as you can see over here, as expected, the market swept the London lows, which is the sell side liquidity. Now my first major confluence is achieved. Now I was looking only for market structure shift, which I even got from the 15 minutes time frame itself, right? I never got it from the 5 minutes, I got it from the 15 minutes. So I entered here. Here was the market structure shift. Right. So I entered immediately after the market structure shift, and my stop loss was just below this low, as always, right? And I was aiming for my usual risk to reward ratio of 1 to 4, right? But what did happen over here is that at 1 to 2, after the market having swept the Monday highs, these were the Monday highs that were swept on Tuesday, right? After the market having swept those highs and giving me a risk to reward ratio of 1 to 2, I took 50% of the position, right? I took 50% of the position, and what I did was that I never moved my stop loss to break even. Why? Because there was no low within here. There was no low for me to put my stop loss under, right? So I only follow market structure, right? In other words, if there is no low, there's no way I can do what I can just put my stop loss anywhere at the break even. So there is a chance that the market could reverse, take me out at the break even and go into my direction, because what? Because there's no market structure that is being followed, right? So my stop loss still remain down here, but there is reduced, right? There is reduced by 50%. Now what did happen is that after the market giving me a risk to reward ratio of 1 to 2 and me having closed off 50% of the position, the market reversed and took us off at our stop loss, not break even, right? So I lost like less than 1% on that, and I made like, overall on the trade I made 1%. To be honest, I made 1% on that trade, right? Though the market stopped us out at our stop loss, not at break even. So let's see what happened on Wednesday. On Wednesday, I took a sell trade, right? And before you ask me, I know you'll be like, oh, you went against your daily bias, right? I understand all that. Now, let me explain the reason as to why I look for buys, though the market seems to be overall and from the higher time frame bullish, right? Why did I take the sell trade? As you can see over here, on Tuesday the market did close bearish. This was the Tuesday daily candlestick, right? And as you can see, the market swept off the Monday highs, and it closed below the high of Monday, right? So this was now giving me signs that it was going to be reversing, short-term reversal or retracement, and I wanted to align myself with all that, right? That was exactly why I was looking for a sell trade in a dominantly bullish market, right? So when we head down to the 15 minutes time frame to see what happened during New York session. So what do you see over here? As you can see, there was a phase of accumulation during the London session. The London session, the market was only accumulating, and this was also giving me the motivation to believe that this market was going to be a sell, right? This market was going to be selling that day. Reason being is that I wanted to see the market manipulating the accumulation. In other words, sweeping off the liquidity over here. And these were a bunch of so many highs. That means huge liquidity was lying up there, right? Huge liquidity was lying up there, and this was buy side liquidity. So these were a number of highs that were lined up from the London session, right? This now gave me motivation that during New York session, I want to see the market sweep off all those highs, give me some form of a market structure shift. Then what do? I enter for my sell trade, right? Now this is what happened, right? The market during New York session went up, swept those highs, and what did happen over here? Gave me a market structure shift, very clean market structure shift over here, right? Now I entered from the 5 minutes time frame. I entered somewhere there. I think it was somewhere there. And my stops were up there, right? Now, I was heading for 1 to 4, but what did happen is that at 1 to 2, I took 50% of the position, right? And when I saw the market reversing, I looked at the 4-hour time frame. Now, from the 4-hour time frame here, there was a major issue. There was this bullish order block from the 4-hour time frame that was almost being mitigated, right? It was actually mitigated at that level, and the market began retracing. That's why I decided to take off all my remaining position, right? Let me get down to the 5 minutes time frame. This is the 4-hour order block I marked earlier, and the market tapped the order block and it began reversing, right? So somewhere here, I took all my trades off. I knew that the market was not going to reverse and be like, no, this is a higher time frame POI, and there's a high chance the market is gonna react off from there. So I took all the remaining position off that trade, and I ended up making only 2% for the trade, right? So this is what happened on Wednesday, guys. Let's wait for Thursday and we see if you're gonna take a trade or not. So on Thursday, I went for a buy trade, and the reason behind the buy trade was that from the hourly time frame, there was this bullish order block. I never wanted to see that bullish order block being violated or being punched through, right? I wanted to see the market bounce off from that zone or that bullish order block, right? Now, that's all I wanted to see for me to be looking for a buy trade. Now, I headed down to 15 minutes time frame to see what happened during New York session. Now, in New York session, at first I had the zone over here. This was my first zone. I was looking forward to the market mitigating this order block or this zone, giving me some form of a market structure shift. Then I looked for the buy trade, but that never happened. The market violated the order block or the zone, which I removed. Now there was this second zone over here, right? This second zone is where the market reached and it gave me signs of reversal, which is obviously the market structure shift, which I got from the 5 minutes time frame. Right, so here, it's where the market gave me the market structure shift, right? And I did enter for the trade immediately after the market structure shift. My stop loss was just below over here, and my TP, as always, for risk to reward ratio of 1 to 4. But as you can see, after 1 to 2 risk to reward ratio, I took 50% of the position and I moved my stop loss where to this low over here. I never put it at the break even because the market had already formed high highs and high lows, so I was trying to follow market structure and I put my stop loss to the most recent low. And as you can see, the market reversed after me taking off 50% of the position and took us off at our stop loss, which I moved up to the most recent low, right? So guys, this is what happened on Thursday, and I made almost 2% on this trade. So let's check Friday and we see what actually happened on Friday. So on Friday, I took my last trade for the week, right? And it was a sell trade. The reason behind the sell trade was that As you can see from the 4-hour time frame, there was this low that was swept, right? This was let me call it market structure shift. And what did happen is that the market went up and mitigated this order block, this 4-hour order block, right? So I was looking forward to the market sweeping these lows over here, right? I wanted to see the market sweep those lows during what? During New York session. That's why I was looking for the sell trade. Now let's go down to the 15 minutes time frame to see what actually happened and see the things I normally look for in the 15 minutes or in the New York session. So as you can see over here, by the way, I normally take my trades from the 5 minutes time frame, right? And from here what I saw from the 5 minutes time frame, or what I was looking for from the 5 minutes time frame, was a liquidity sweep. If I never got the liquidity sweep from the previous session, I should get the liquidity sweep within New York session itself. So let's get down to 5 minutes time frame. So as you can see over here, as New York session clicked in, there was no form of a liquidity sweep from the London session, right? The market just dropped up to here, swept these lows, right? And these lows to me were a market structure shift, right? Now I wanted to see, as the market was now retracing into the zone, I wanted to see some highs being swept, and I should consider that as liquidity sweep before me entering for the trade, right? And what did happen is that, of course, the market did give us this liquidity sweep, buy side liquidity sweep. And from the 15 minutes time frame, this liquidity sweep also happened just below what? Below that fair value gap, right? Now that motivated me to enter for a sell trade, right? Now what I wanted to see was that I wanted to see some internal market structure shift from the 5 minutes time frame for me to enter for my sell trade. And what did happen is here, internal liquidity or the internal market structure shift was here. I don't know if you guys can see it, right over there. This low was actually swept or broken during New York session after the market tapped into the inefficiency above it, right? Now I did enter for my trade immediately after that, below here, right? Now my stop loss, I put it up there. I wanted to be so conservative with this trade. In other words, there is a chance that the trade would still move up, mitigate some POIs over here like this 5 minutes order block. There's a chance that the market could go up there, mitigate it and drop, right? So I put my stop loss up there to the final high, right? And my TP is always down there, right? And as you can see, what did happen is that the market went up, swept us out of the trade just by week. Let me see by how many pips. Less than how many pips? Less than 30 pips, right? Actually in gold, that's just too small, right? That's a small number of pips. And as you can see, what did happen after that? The market dropped massively and rapidly into our direction. So guys, we were not wrong in the direction, we were only wrong in the entry, right? So guys, this is what happened on Friday. Now let me show you the overall results for the week. So guys, here is our overall weekly result, right? On Monday, the first trade of the week was a break even. We never made anything from that trade. On Tuesday, we made 1%, right? And the market stopped us out at break even. On Wednesday, we made almost 2%. Let me just put it as 2%, right? On Thursday, we made also 2% on Thursday. And on Friday, we lost the first trade of the week. And we lost almost 1.5% on that trade. So when we sum all the above, when we sum them up, we ended the week with a 3.5% profit for the week, right? So guys, this is what happened for the week, and it was a winning week. It wasn't a bad one, right? So let me show you my ProFarm account and where it is at the moment, right? So guys, here is where we are at the moment in our ProFarm account. As you can see, we are up 1.7%, almost 2%. Right. Last week we were at a negative, but this week we are up. Right, and I hope next week we're also going to keep moving up. Right. So guys, this is where we are at the moment. This week was a good one. It took us out of drawdown, and I hope next week we are gonna what? We are gonna keep moving up. We are not again going to go into drawdown, right? So guys, this is all I have for this week. And like I normally say, if you have watched up to the end of this video, please don't forget to subscribe. I hope you found this video insightful, and I hope it's motivating you and boosting your confidence into trading the markets, right? So guys, hope I see you in the next episode. Peace out.